Arista stock is down nearly 20% in just 1 month. Even though the earnings themselves were not bad, what's really making the market uneasy isn't the numbers, but a deeper question. Now that Nvidia is stepping directly into networking, can a high-quality company like Arista still command the same certainty premium it enjoyed in the past? In today's video, we're only breaking down this one issue. Hey everyone, this is Stock Market Breakdown. Today we're only talking about one company, Arista Networks. This post-earnings drop is actually very typical on the surface. It looks like gains came in slightly below expectations, but what really triggered the repricing is that the market has started to reassess Arista's positional security. Inside AI networking, this is not an emotional sell-off. It's a stress test on the company's long-term pricing logic. If you zoom out and look at the long term, Arista is absolutely a textbook example of a great company. Over the past decade, revenue has climbed from just over $2 billion to more than $8 billion. An AI data center, CapEx has accelerated that growth even further, but that's exactly where the issue lies. When a company is universally viewed as a high-quality asset, the market becomes extremely sensitive to any marginal change. What this earnings report really amplified wasn't quarterly performance, but whether the pace of the next quarter is already being disrupted by competition, especially after Nvidia introduced its own networking solutions and started bundling them with PUS. The market began recalculating a core question: is Arista's growth structural, or is it entering a much more intense competitive phase? And that's why this sell-off isn't rejecting Arista's fundamentals, it's rejecting the old assumption of certainty. The market is no longer assuming frictionless expansion. Instead, it's asking whether the moat can maintain the same depth once competition moves from the edges into direct confrontation. From a quality standpoint, Arista is almost flawless. Its return on invested capital has stayed extremely high for years, and not as a one-off, but as a sustained improvement. Cash flow as a percentage of revenue has also continued to rise. What does that mean? It means that in theory, the company has real flexibility when facing competition. It can lower prices, increase R&D, or strengthen its sales organization, but the market doesn't award a premium simply because you can respond. The market wants to see whether that capability actually needs to be used. The moment those levers are pulled, it already signals that competition has materially entered what used to be a comfort zone. So now you're seeing a very subtle dynamic. Bulls are calling this a fear-driven opportunity, while more cautious capital is asking whether a 0x earnings multiple can still be justified under the assumption of almost no direct competition. This isn't about being bullish or bearish, it's about whether the valuation assumptions need to be reset. The valuation conflict is actually very clear. On one hand, using traditional metrics for 0x earnings doesn't look outrageous given Arista's growth quality. On the other hand, once you introduce competitive variables into the model, the margin of safety around intrinsic value starts to shrink, and that's the state the market hates the most. A company that's excellent, but with a future path that's no longer clean. That's why the stock was quickly downshifted after earnings dip, because the business suddenly deteriorated, but because part of the certainty premium was removed. This is also why I keep emphasizing that what really determines Arista's stock price isn't next quarter's revenue, but whether Nvidia's networking solution shifts from being a supplemental option to a default option. Once customers start favoring integrated purchasing, market expectations for Arista have to be recalibrated. From today's vantage point, Arista's situation is very representative. It's still a high-quality, highly profitable, high-cash flow company, but the market is no longer willing to price it as a risk-free growth story. The future trajectory depends on two things. First, whether Arista can continue to widen the performance gap at the high end of networking. Second, whether customers are truly willing to reject simpler integrated solutions in exchange for that performance. Until those questions are clearly answered, volatility itself is part of the pricing process. There's another point that's being overlooked in many discussions. The debate right now isn't whether Arista will be killed by Nvidia. It's whether future growth comes primarily from expansion or increasingly from defense. Once a company's narrative shifts from taking share to holding ground, even if profitability stays the same, valuation models inevitably adjust. That's the core reason behind the current back and forth in the stock price. If you extend the lens even further, you realize this isn't unique to Arista. It's a phase that every company sitting in the middle layer of AI infrastructure eventually faces early on. The market pays a trend premium in the middle phase. It pays an execution premium, and at this stage, it starts pricing structural security for Arista. That means continuously proving that its network performance advantages, software ecosystem, and customer stickiness are strong enough to withstand pressure from integrated solutions. As long as the proof holds, even slower growth can still support valuation stability, but before the proof is fully established, any slightly conservative gains will be amplified by the market. So if you ask me what's happening to Arista right now, I won't say the company has deteriorated, and I won't say the opportunity is already on the table. I say it's transitioning from a high certainty growth stock into a phase where the moat needs to be re-verified. The market isn't rejecting Arista, it's demanding a higher standard of proof. Once that line is clearly confirmed, valuation and direction will naturally stabilize. This is Stock Market Breakdown. I'll see you next time.